2022 was a year of serious turmoil in the markets. The Federal Reserve made the mistake of saying that inflation was transitory, and then when it turned out that they were very wrong, they had to come in and raise the rates over and over again. The rates went from 0.25% to where we are now at nearing 5%. That is a 1,900% increase in the federal funds rate, which in turn increases interest rates down the line for everyone from individual people to corporations, and the discounts that the future cash flows at higher rates, thus making the price of stocks lower, especially the higher beta speculative stocks that so many people touted during the pandemic. It was clearly a bubble, but during the exuberance of a decade-long bull market, you can get some hubris in thinking that things will continue to go the way they have been. It seems the best move for 2022 was to actually just keep your money in cash, as almost all assets lost value. This seems counterintuitive to some folks because the cash is losing its purchasing power. That is what inflation is. But while our cash loses its purchasing power, most assets decline in value significantly more than our cash's purchasing power. Let's see which industries fared the best and why. The most obvious winners of 2022 are aerospace and defense and energy stocks. This was due to the Russian-Ukrainian conflict, but also because of bad domestic energy policies. When energy stocks go up, it's good for those holding stocks, but it also generally means that everyone is going to be paying more for the energy that they consume. Probably one of the best trades that you could have made in 2022 was to sell your innovation stocks at the start of the year and buy defense and aerospace and energy stocks, when the Fed started to signal that it would raise rates and inflation was not transitory. The energy and defense and aerospace stocks should continue to see a rise if the war is not settled. The change in domestic policy would probably not change the prices for several years. Medical distribution and drug manufacturers fared relatively well in 2022. Large cap big pharma corporations did very well, with the exception of Pfizer, who seems to have sold off as a result of the massive scandals that are going on over there. The insurance industry rounds out our group of winners for 2022. The biggest loser was in the tech sector. It seems that the catalysts produced by the pandemic led to some insanely high valuations for risk assets like innovation stocks. One of the more talked about funds in this sector is the ARK Innovation Fund. It's close to 70% down in 2022, and even more than that from all-time highs. Coinbase, one of my top holdings, fell close to 85% in 2022. Metastock, a large cap established company, declined around 60% in 2022, mostly due to analysts looking at the metaverse project as a waste of money that won't pan out for decades, if at all. Mark Zuckerberg dumped $100 billion into this project, and there was even talk of him being outed from the company. The second loser sector on our list are the REITs, especially office and commercial. They got crushed this year, and I don't believe that the pain is entirely priced in yet. Not just for publicly traded real estate companies, but all real estate in general should take a big hit in 2023, just as it did in 2022. The market is dramatically slowed down, but it also seems homeowners are not dropping prices to levels where people want to buy. To me, this signals more declines in the housing market, so I don't think that right now is the best time to buy a house. Wait for rates to come down, as they should. Asset managers took a big hit this year with Blackstone and KKR both falling in value. It turns out that when assets are going down in value, the firms that manage those assets see a decline in their value as well. Asset management is one of the best businesses to be in long term, so I see this to be a short-term downturn. BlackRock and KKR are usually pretty good places to park your money. It would be nice as investors if we could figure out which sectors will do well and which will not, and then invest in those sectors and rotate out of the sectors that are now going out of favor. But this is far easier said than done. People try for their entire lives to figure out how to do this. And looking back in history, it could seem like it would be obvious when to rotate out. But hindsight is always 20/20. You have to realize that you are not some superhuman investor who knows when to get in and out of certain stocks or even sectors of the market. The best thing for most people is to ignore the market altogether, invest in index funds, and have someone professional manage your money. It isn't that the manager will be a better stock picker than you. That is not the utility of an asset manager. It is that the manager will know how to pick a portfolio of stocks that meets your appetite for risk and your specific goals.